Welcome back to XRP Pulse, where we track the biggest Ripple, XRP, and crypto market stories with clear facts, real context, and zero confusion. Today, we have a major update that has the XRP community talking because Ripple CEO Brad Garlinghouse has reportedly laid out a massive target for the company, reaching $1 billion in recurring operating income by the end of 2026. But here is the part that makes this story especially important. That $1 billion goal does not include XRP token sales, and it does not include the XRP Ripple holds on its balance sheet. In other words, Ripple is trying to show the market that its business can stand on its own, separate from the price of XRP. That is a powerful message because for years, many people have looked at Ripple and XRP as if they were the same thing. But this update shows Ripple is pushing hard to prove it is not just a crypto company waiting for a token price rally. According to the information shared through CoinMarketCap, Garlinghouse is making it clear that Ripple's future revenue goal is based on the company's commercial business, not on selling XRP. That matters because it changes the way investors, institutions, and regulators may look at Ripple. Instead of being seen only as a blockchain startup connected to one digital asset, Ripple wants to be seen as a serious fintech infrastructure company. The company is building payment systems, liquidity tools, stablecoin products, prime brokerage services, and enterprise-grade financial technology. And the big message here is simple. Ripple wants to make money even when the crypto market is under pressure. So whether XRP is moving up, down, or sideways, Ripple is trying to build a business model that keeps producing revenue. That is why this billion-dollar target feels bigger than just another headline. It is about Ripple trying to prove long-term staying power. Now let's talk about what is driving this confidence inside Ripple. The company's valuation reportedly jumped to around $50 billion in the first quarter of 2026, and that did not happen by accident. A major part of this growth appears to be tied to Ripple's expansion into deeper institutional services. One of the biggest pieces of that puzzle is Ripple Prime, a brokerage service that became much more important after its integration with Hidden Road. After that integration, revenue connected to the service reportedly tripled. That is a huge signal, because Prime brokerage is not about retail hype or meme-driven trading. It is about institutions, large money managers, corporate clients, and professional financial players needing serious infrastructure. Ripple is clearly trying to move into that world, where the clients are bigger, the contracts are stronger, and the revenue can be more predictable than relying on market speculation. And this is where the story gets even more interesting for XRP holders and Ripple watchers. Ripple's main customers are not regular traders sitting at home watching charts all day. Ripple is going after corporate treasurers, Fortune 500 companies, banks, payment providers, and institutions that need to move large amounts of money across borders. These are clients that care about speed, cost, liquidity, compliance, and reliability. According to the report, Ripple's payment rails have already helped move more than $100 billion. That number is important because it shows Ripple's technology is not just sitting in a white paper or being talked about on social media. It is being used for real financial activity. And when companies can manage currencies, liquidity, and payments through one system, that becomes a serious business product. That is exactly the kind of use case Ripple has been talking about for years. But here's the key point that everyone needs to understand. Ripple's $1 billion revenue goal being separate from XRP does not mean XRP is irrelevant. It means Ripple is trying to build a company strong enough that it does not depend only on XRP market performance. That is actually a major difference. A stronger Ripple could bring more trust, more institutional attention, and more serious partnerships into the broader ecosystem. At the same time, it also shows that Ripple is thinking like a mature financial technology company, not just a crypto project chasing token price movement. For the XRP community, this creates an interesting debate. Some people may ask, if Ripple can make $1 billion without XRP sales, what does that mean for XRP itself? Others may see it as a positive sign that Ripple is becoming more stable, more respected, and more capable of surviving any market storm. Ripple is also pushing forward with its dollar-backed stablecoin, RLUSD, and that part of the story deserves attention. In a short amount of time, RLUSD has reportedly become one of the faster-growing stablecoin projects in the market. Stablecoins are extremely important in crypto because they act like digital dollars that can move across blockchain networks. They are used for payments, trading, settlement, liquidity, and institutional on-chain finance. Ripple entering this space is not random. It fits directly into the company's goal of becoming a major player in global financial infrastructure. If Ripple can combine payment rails, stablecoin liquidity, enterprise clients, and blockchain settlement, then it has a much broader business than just one token. And that is exactly why this story feels so important. Ripple is building multiple revenue engines at the same time. Another part of Ripple's future plan is connected to the XRP ledger and artificial intelligence payments. Ripple has launched an AI starter kit tool designed to help developers prepare for a world where AI agents may need to send and receive payments automatically. That may sound futuristic, but it is becoming a serious topic across the tech and crypto industries. If AI tools are going to perform tasks, buy services, pay for data, settle microtransactions, or interact with digital systems, then they will need fast and cheap payment rails. Ripple clearly wants the XRP ledger to be part of that future. This is not just about today's market price. This is about positioning the network for the next wave of financial automation. If machines, businesses, and apps start making payments without human friction, blockchain-based settlement could become a major opportunity. At the same time, Garlinghouse is also focused heavily on regulation in Washington, especially around the Clarity Act. According to the report, he has been pushing lawmakers to create clearer rules for digital assets in the United States. This is a major issue because banks and large financial institutions do not want to operate in a market where they could face lawsuits or unclear enforcement actions at any moment. Garlinghouse has argued that clearer rules could bring crypto activity back to the United States instead of pushing it offshore. That is an important point, because the US has been behind in some areas of crypto regulation compared to other markets. If Congress creates a clearer framework, it could make banks and major institutions more comfortable working with crypto companies like Ripple, and that could open the door to much larger adoption. The timing also matters. The report says Congress may have only a limited number of legislative days before the August recess, which adds pressure to the conversation around crypto regulation. Ripple knows very well how important legal clarity can be. The company spent years dealing with regulatory pressure from the SEC, and that experience shaped how the entire crypto industry looks at Ripple. So when Garlinghouse talks about the need for clear rules, he is not speaking from theory. Ripple has lived through the uncertainty. The company understands how much damage confusion can cause, not just for one business, but for the entire industry. That is why Ripple's lobbying efforts are not only about Ripple. They are part of a larger fight over whether crypto innovation will stay in the United States or continue moving to friendlier jurisdictions. Now let's bring this back to XRP, because while Ripple's business is growing, the XRP token itself has been under pressure. The report points out an interesting paradox. XRP has struggled in price while Ripple's business has been setting records. At one point, XRP reportedly dropped below a key long-term support level around $1.32 and traded near $1.15. For many traders, that kind of breakdown looks bearish on the chart. Losing major support levels can scare the market, especially when the price falls below important moving averages. But the story does not end there. On-chain data from the XRP ledger suggests the sell-off may be getting tired. That means even though the price chart looks weak at first glance, network activity may be telling a different story underneath the surface. One of the most important signals is payment activity on the XRP ledger. Even during the price correction, many payments continued moving between accounts. Transaction counts reportedly stayed above 1 million per day for much of the previous month, even though activity slowed recently. That is important because it shows the network did not simply collapse alongside price. In crypto, there is a big difference between price speculation and real network usage. When price drops but actual usage remains strong, it can sometimes suggest that real users are still active while short-term traders are exiting. That kind of divergence often appears near local bottoms, although nothing is guaranteed. For XRP, this means the market may look weak on the outside, but the ledger still has a solid base of activity underneath. The second bullish metric being discussed is payment volume. Over the past month, XRP payment volume reportedly saw several major spikes, including one move that passed 1.5 billion XRP. That is not a small number. When large transaction value keeps moving through the network, it can mean bigger players are still using the ledger even while the token price is struggling. This does not automatically mean a price rally is coming tomorrow, but it does suggest the network is not dead. It also shows that activity may be stronger than the price chart alone makes it seem. Markets often move emotionally in the short term, but utility and network usage can tell a deeper story. And right now, some analysts believe XRP's on-chain activity may be stronger than the bearish price action suggests. The third key metric is active users. The sell-off did lead to a decline in active XRP ledger participants, but the number reportedly remains relatively high compared to historical averages. That is important because when active users stay present while price falls, it can mean real usage is holding up better than speculation. In simple terms, the weak hands may be leaving faster than the core network activity. That kind of setup can sometimes create the foundation for a stronger recovery if selling pressure begins to fade. But for XRP to confirm a real trend reversal, the price would likely need to reclaim the previous support area around $1.32. If buyers can push XRP back above that level and hold it, analysts may start watching the next major target near the 200-day moving average around $1.70. That possible move toward $1.70 would represent a major recovery from the lower price levels mentioned in the report. And some analysts say it could be close to a 50% rebound if momentum returns. But let's be clear, this is not a guarantee and nobody should treat it like one. Crypto markets are volatile and XRP still needs confirmation on the chart. The important thing is that the technical picture and the on-chain picture are not saying exactly the same thing right now. The chart looks damaged, but the network data shows there may still be strength underneath. That creates a very interesting setup. Traders are watching resistance levels, long-term holders are watching utility, and institutions are watching Ripple's business development. All of those pieces are moving at the same time. There is also fresh activity around RLUSD that adds another layer to the Ripple story. According to the stablecoin tracker mentioned in the report, around $55.9 million in RLUSD was burned over the last 7 days, while only about $8.8 million was minted. That means burn activity has been stronger than minting activity during this quiet period in June. At the start of the month, RLUSD saw much larger activity, including $127.4 million minted and $12 million burned on June 1st. But as June moved forward, stablecoin activity slowed down. That does not mean the project is failing. It simply means minting and burning have been quieter compared to May and compared to the beginning of June. Stablecoin supply changes can happen for many reasons, including liquidity shifts, institutional movement, redemption activity, and market demand. Even with quieter minting and burning, RLUSD still received important announcements in June. One of the biggest updates was RLUSD going live across ecosystems through Wormhole's native token transfers. That allows RLUSD to move natively across multiple blockchain ecosystems, which could support cross-border payments, institutional on-ramps and off-ramps, and tokenization use cases. This matters because stablecoins become much more useful when they can move across different networks instead of staying trapped in one place. For Ripple, this fits perfectly with its bigger strategy. The company wants to provide compliant, dollar-backed liquidity for institutions, developers, and payment systems. If RLUSD can become a trusted stablecoin option across multiple ecosystems, it could become another major piece of Ripple's revenue and infrastructure story. So when we put all of this together, the bigger picture becomes much clearer. Ripple is no longer trying to be seen as just a company connected to XRP price action. It is trying to become a full-scale financial technology powerhouse with payment rails, stablecoin products, prime brokerage services, institutional liquidity tools, AI payment infrastructure, and a major voice in Washington regulation. The $1 billion recurring operating income target by the end of 2026 is the headline, but the real story is what that target represents. Ripple wants to prove that it can generate serious revenue without depending on XRP token sales. That could change how institutions view the company, how regulators understand its business, and how the market separates Ripple's commercial growth from XRP's day-to-day price moves. For the XRP community, this is a moment worth watching closely. On one side, XRP price action has been under pressure, and traders still need to see stronger confirmation before calling a real recovery. On the other side, Ripple's business appears to be expanding into areas that could matter for years, not just days or weeks. That is why this headline is getting attention. A $1 billion revenue run rate without counting XRP holdings would be a major milestone for Ripple. It would show that the company has grown beyond the early blockchain startup phase and is competing in the world of serious financial infrastructure. And whether you are bullish, cautious, or somewhere in the middle, one thing is clear. Ripple is trying to send a message to the market. It wants to be judged not only by the XRP chart, but by the strength of the business it is building behind the scenes.